Hello everyone, good morning and a very warm welcome to today's webinar all about Directors National Insurance. My name's Duncan, I'm your host and presenter for this webinar, and we are joined in the background by my colleagues Alice and Paddy, who are both standing by and waiting for your questions. Let's now take a look at what we're going to cover in the webinar. So I'm going to start things off with an introduction explaining how national insurance is calculated, specifically for company directors, and explaining the differences between employee and director calculations. We're then going to discuss the director status. There are two statuses you can use to calculate national insurance, either the annual basis or pro-rata basis, and we'll look at some examples of how that might affect the way that the national insurance is paid. We're then going to cover the cut in employees' national insurance rate that was announced in the autumn statement last year and how that change to NI legislation impacts directors. And then we're going to finish the demo with some examples of directors' NI calculations, so showing you how it works in the program and also running through the numbers of how we get to the end result. We then should have some time at the end to continue answering any of your questions, let you know about the further support, and all in all, it should take around, I would say, 30 to 45 minutes. So that's what we've got lined up for you, and let's get things started by taking a look at how national insurance is calculated. Now, before we describe the calculation, because this is all around directors' national insurance, I thought it would be useful to start off with the official definition of a company director for NI purposes. So this information is available in HMRC's National Insurance for Company Directors Guide. So that's guide CA44, a really useful link on the slide here that will tell you everything you need to know about the legislation. But for national insurance purposes, a company director is a member of a board or similar body where the company is managed by a board or similar body, or a single person where the company is managed by an individual. So if you're at all unsure whether an employee on your payroll should be treated as a company director, refer to this guidance and speak to HMRC for clarification if that doesn't answer the question. So having director in the job title doesn't necessarily make you a company director for NI purposes. It's this specific definition that would do. So on to the NI calculation, and let's just have a look at the differences between how national insurance is calculated for non-directors or employees and directors. So as you're probably aware, for non-directors, national insurance is calculated each period based on the earnings in that period only, and it will use either weekly or monthly thresholds to calculate the amount of national insurance due. So you can see the thresholds are listed there in the table, which can also be found in your legislation settings, and I'll show you how to find that when we go into the demo. In terms of the employer's national insurance contribution, it's calculated on earnings above the secondary threshold. So for the current tax year, that's £175 per week. You can see the monthly and yearly equivalents. And for the employee, the national insurance is payable on earnings above the primary threshold, which is currently £242 per week. So that's a non-director using a non-cumulative calculation. Now, the difference for directors is that by the end of the tax year, directors' national insurance must be calculated using their earnings to date and the yearly national insurance thresholds. And the reason why I say by the end of the tax year is there's two different methods for calculating directors' NI. Ultimately, it will be done on an annual cumulative calculation, but there is a way where you can use weekly or monthly tables throughout the year and then recalculate the national insurance at the end of the year. And we'll discuss that in the next section. So yearly thresholds, as you can see, are there in the yearly column. So secondary threshold is £9,100 per year, and the primary threshold is currently the same as the personal allowance for PAYE tax, £12,570. And you can check the rates of national insurance for the various categories on the gov.uk website. So I mentioned for directors that by the end of the tax year, it's calculated using an annual calculation. For some directors, this will happen throughout the tax year if you put them on the annual basis status, or there's another director status where it can be calculated in the same way as a non-director throughout the year and then recalculated at the end of the year. So this is where the director status in Sage 50 Payroll comes into play. And there's a drop down where you can set an employee up as a director. You would need to choose one of the two statuses, either annual basis. So NIC is calculated on cumulative earnings, the annual method throughout the tax year, or what we call pro-rata basis, used to be known as table method a few years ago, where NICs are calculated in the same way as a non-director, but then recalculated in either the last period of the tax year or the last period of directorship if a director is leaving the business. So I want to show you the director status in the program and also sort of clarify when a director status can be changed. So if I just bring these slides down, you'll see that I'm logged into my payroll already. So just looking at the employee records, I'm just going to open the first employee in my list. And to find the director status, you just go onto the employment tab. And here on the right-hand side, you can see for this first director, I have set them as director annual basis. So opening the drop down, you'll see there are three choices: non-director, director annual basis, director pro-rata basis. But once an employee has been set up as a director, you can only change them to a non-director. So if they cease to be a director during the tax year, you can only make that change at the start of the next tax year. So that's in line with the rules around national insurance for directors. You'll see if I do try to change it to non-director, it tells me that I cannot make that change. The other thing you can't do is switch from director annual basis to pro-rata basis in the middle of a tax year. So if I try to do that, again, we get the message that NI legislation does not allow that change. But if you do have directors set on the pro-rata basis, you are able to change them to annual basis at any time. So that is where you set the director status. And once an employee is set up as a director, if you view their year-to-date values, I'm just going to show you here, you'll see there's a tab for directors NIC. So you only see this for a director. It confirms the date the directorship began. So whether that's after the start of the tax year or before the start of the tax year will determine which kind of annual thresholds are used. And you'll see that it keeps records of the cumulative earnings here in the Directors NIC tab. So we'll probably be seeing this screen a little bit later on when we start looking at calculations. So that is where you set up your directors. And the status that you choose is completely down to yours and your director's preference, I would say. But annual basis is more suited for any director where the earnings are not consistent across the year, as this way they will always have paid the correct amount of national insurance due to date. Whereas pro-rata basis gives a director that receives a regular income that stays the same a more convenient way of paying it, as it can be spread more evenly throughout the year. And when we look at some of the examples, you'll see how that kind of works. So annual basis or pro-rata basis, there's no right or wrong answer, but as I say, annual basis more suitable for pay that varies, pro-rata basis more suitable for pay that stays the same all year round. So before we start looking at some of the calculations, I did want to mention the autumn statement, which was announced last year, where there was a cut in the employees' national insurance rate. So the main rate of employees NI was reduced by 2 percentage points. So from category A, that was from 12% to 10%, with effect from the 6th of January. And non-directors will have seen that change kick in on their first payroll on or after the 6th of January. But for directors, where there's an annual calculation, it will use an annualized rate for the main percentage of 11.5% on earnings between the primary threshold and the upper earnings limit. So that 11.5% represents a rate of 12% for 9 months of the year and 10% for 3 months of the year. So overall, that comes out at 11.5% average. And as long as you've installed the latest update to Sage Payroll, which was a mandatory update, it's version 29.3, 29.03, you will have had your legislation settings updated, and the annualized directors rate will come into force immediately for any directors on the annual method, and it'll be used in the recalculation for directors who were on the pro-rata basis or the table method. So remember, with that pro-rata basis, national insurance is calculated in the same way as a non-director until the final period of the year or the period in which the employee is leaving. And you can read more about that cut in employees NI rate following the link on screen. So I just want to show you where to find the legislation settings. So we've mentioned it a couple of times. So if you choose your company tasks here on the left-hand side and then select legislation, it'll bring up the legislation settings for the current tax year. And if I click onto the NI tab, you'll see you've got your NI bandwidths and rates with an effective from date for employees. So with effect from the 6th of January, the employee rate for category A went down to 10%, but prior to that, it was at 12%. But for directors, if we switch it to directors, you can see that the employee rate is the annualized rate of 11.5%. And technically that is effective for the full tax year, although it was only announced late in 2023. So if you were to roll back any periods and reprocess a director, it would always use this 11.5% rate for the national insurance, assuming you're on the latest version. So this is the directors NI legislation, and you can see that's why it's got that 11.5% rate for category A. So we've talked a bit there about director statuses and how the director's rate is applied across the year as an annualized rate. But we're now going to do some calculations for directors' national insurance. With there being changes to national insurance during the year, you might well be asked to sort of check a calculation. So this information could be useful. And if you download the handouts, you'll see all of the workings for these calculations if you want to go through them at some point after the webinar. So what we're going to do for each of these is we're going to show you the example in Payroll, and then I'm going to work through the calculation on a slide. So we're going to start with a pretty simple example. So I'm just going to return back to my Payroll tasks. And for my first 2 employees, I have one director set up on the annual basis and another director set up on the pro-rata basis. If we go into their employee record, and I'll just show you their history, you'll see they get the same gross pay every month, £5,000. So this is the history tab for the annual director, history tab here for the pro-rata director. So we're going to process the final period of the year, and we'll just have a look once we've done that at how the national insurance has been calculated throughout the year. So pro-rata basis for employee 2, annual basis here for employee 1. So I've set my process date to the last pay date of the year for my monthly payroll. I'm going to go into the enter payment screen. Now for the first director who is on the annual basis, we can see the £5,000 salary, and the employee's national insurance is coming out at £100. And the reason for this is that the cumulative earnings is now above the yearly upper earnings limit. So the rate of national insurance that applies is 2%. So £100 is 2% of the £5,000 they've earned this month. The employer's contribution can be checked if you click the employers button just here. You can see that the employer's NI is £690, and that is at the employer's rate of 13.8%. So 690 is 13.8% of £5,000. Now, if we compare that with the next employee, you'll see that the national insurance for the employee is £331.20, and for the employer, £584.80. And this is the period in which the national insurance has been recalculated using a cumulative calculation, but it hasn't made a massive difference in any of the contribution amounts because this employee has earned the same amount each month. So when I click on to save next, with it being the last period of the year, you can see a message that the director has been recalculated on a year-to-date basis. Now, the information tab gives you more detail on how the calculations are done. And if I go to the national insurance tab, you can see the employee NI to date is 4530.10, and just going back to the previous employee, it's exactly the same to date. So over the course of the year, they've paid the same national insurance, but they've kind of paid it at different times. And this is best illustrated by running a report over the year. So I'm just going to update the records. And I'm just going to show you the employee history report. So employee history report detailed. This gives a good summary of the national insurance and tax deductions for an employee. So if I run it for the full year, you'll just see here that the totals are the same for the gross pay, for the employer's NI, and the employee's NI. In fact, all of the totals are the same because they are earning the same pay, but the net pay each month has differed because of the way that the national insurance has been calculated and deducted. So for this first employee, you can see no employee national insurance was paid until the cumulative earnings were above the annual primary threshold, which is 12,570. So it kicked in month 3. And similarly for the employer's national insurance, start being paid once the cumulative earnings were above the secondary threshold. And you can see for the employee, the rate reduced once the cumulative earnings went above the upper earnings limit. So towards the end of the year, they've paid less national insurance, where it's been spread out more evenly for the employee on pro-rata basis because it has used the monthly tables. And you can see it's reduced in January and February because the rate came down to 10%. But over the course of the year, they have paid the same. And actually, when you move into the new year, you'll see the exact same thing happen. We haven't got the new software installed just yet. But when you do period 1 of the new year, you'll see for annual basis directors, there's no national insurance being paid at the start of the year, and that's because the earnings to date are less than the primary threshold. So just to show you the maths on this one, annual thresholds are picked up from the legislation. Earnings to date was £60,000 in this case. For the employer NI, simply deduct the secondary threshold and multiply by 13.8% to give you the employer NI due to date. And you can see that is the total of the employer NIC regardless of the method. And then for the employee national insurance, because the cumulative earnings were above the upper earnings limit, calculation's done in 2 stages. So first of all, you take the earnings in excess of the upper earnings limit. So the 60,000 minus 50,270, that's at 2%, so £194.60. And then earnings between the primary threshold and upper earnings limit are at 11.5%, the annualized rate. And adding those 2 numbers together gives us the employee NI. You can see from the report there, that is the exact figure that we've got. So I just want to show you next how the pro-rata basis can throw up some perhaps unexpected results when it does a recalculation at the end of the year. And this is particularly true for employees that are not receiving the same amount on a regular basis. So if I just bring the slides down, and I'm just going to highlight my next two employees. So similar to before, I've got one on the annual basis, and I've got the other one on the pro-rata basis. But both of these directors were paid quite a large bonus at Christmas. So looking at the history tab in the employee record, you can see their usual monthly salary is £1,500. They got a £10,000 bonus in December, so £11,500. But aside from that, they are being paid at the same amount each period. So all things are equal here, apart from the director status. So I've got one on annual basis, I've got the other on pro-rata basis. So when I go into the enter payment screen for the final period of the year, you can see the one on annual basis. This is the amount they're being paid this month. Their cumulative earnings are below the upper earnings limit. So this national insurance figure, this £172.50, represents 11.5% of their earnings for this period. So that is the employee's national insurance. The employer's national insurance is £207, is 13.8%, because these cumulative earnings are all above the secondary threshold for the employer. Now, if we compare this with the next employee, the one on the pro-rata basis, that's a salary this month, £1,500, and the employee's national insurance is quite a hefty £726.99. So almost half of their gross earnings, with significantly reduced net pay. And the reason for this, if I click Save Next, is that they have been recalculated on a year-to-date basis. And checking the information tab like we did before, the employee NI to date, 1774.45. That's exactly the same amount as we see for our director on the annual basis. So why has there been such an increase in national insurance for the employee on a pro rata basis? I want to show you the calculation, which should hopefully explain. So the same annual thresholds are applying. Earnings to date at month 11, £26,500. And then we've got the employer and employee national insurance paid to date, which has all been previously calculated using monthly tables or monthly thresholds. And then we've got the final earnings of the year, the £1,500, and the cumulative earnings for month 12. So in terms of the employer, their calculation is their earnings to date minus the secondary threshold multiplied by 13.8%. So that's what they owe for the year. And if we take away what they had paid up to month 11, that gives us the £101.80 that was paid in month 12. So that's not much different to a regular month where they would receive that amount. And that's mainly because the employer's percentage remains at 13.8% on all earnings above the secondary threshold. The employee, on the other hand, if we look at their annual calculation, so we subtract the primary threshold and multiply by the 11.5%, gives us the amount of NI to date. And then taking away what has been paid so far, leaves us with that £726.99. So the reason that that's so high is in month 9, when there was a bonus paid, their earnings in that month were way above the upper earnings limit. So a lot of the national insurance back in December was paid at the 2% rate based on the monthly threshold. But looking at the annual earnings, they are earning less than the upper earnings limit. So the NI on that bonus payment has effectively been recalculated and been charged at 11.5%, hence why the amount they're paying this month has increased. So something to look out for if you do have pro-rata basis directors and their pay has perhaps varied at points during the year. So I'm just going to run through two other quick examples where there are slight changes to the calculation. So the next one we're going to look at is where a directorship has begun midway through a tax year. And when this happens, the annual thresholds that are used in the calculations are adjusted based on the amount of time they have been a director in the year. So we'll show the example in payroll first. So I have a director who has been appointed director in January, as of the 1st of January 2024. So what we do in the program is we're going to change their director status from non-director to director. And I'm going to choose annual basis for this one. As soon as you change a director status, you see this message prompting you to check the date directorship began. So we need to make sure that that reflects the actual date the employee was appointed to director. And that is found from the year-to-date values on the Directors NIC tab. So I'm just going to change this to the 1st of January of 2024, and he's going to be treated as a director from this point. So we can see it stored the earnings as an employee, and these will be kept separate to the earnings as a director. But when the calculation is done, it's going to adjust the annual thresholds based on the amount of time they've been a director in this tax year. So just going into my payments, the employee is getting a regular salary of £2,500. And in this first month of a director, they are not paying national insurance because their earnings haven't reached the relevant primary threshold. The employer is paying a little bit of national insurance in this month. So the secondary threshold in this case has now been reached. And what I'm going to do just very quickly is update the records, set my next pay date, and you'll see now that the employee's NI has kicked in. So they're starting to pay employee NI, and the employer's NI, with it all being above the secondary threshold, is now at that 13.8%. So there's no recalculation at the end of the year for this one because it is annual basis, but I do want to show you how the calculation has been done come the end of the year. So with this particular director, with them starting in the 1st of January 2024, that was week 39 of the tax year, meaning there are 14 weeks in the pro-rata period. The annual thresholds are then adjusted on a pro-rata basis. Now, all of the thresholds are built in to the program, and there's tables that you can look these up in the CA44 guide that we linked to earlier. But there's the maths there of the secondary and primary threshold that is used for this employee. And come the end of the year, the earnings as a director were £7,500. So employer NI due as a director, you simply subtract the secondary threshold, the adjusted secondary threshold, and multiply by 13.8%. That's what we're seeing as the employer's NIC year to date. And then the employee national insurance as a director is by deducting the adjusted primary threshold. And it uses that 11.5% rate. So even though they've only been a director from January, when officially the rate went down to 10%, directors use that annualized rate of 11.5. So that is where the figures we're seeing in the year-to-date values are coming from. Last one for you in relation to a director who is leaving. So again, they're leaving the business, and if they're on a pro-rata basis, this would be their final payment. So in these cases, you do need to select a box to say that the employee is leaving, which will trigger the recalculation of national insurance. So just before I work through how it's been calculated, this is the employee in question. So I'm kind of going back in time here. I'm going back to June of this year. So month 3. Let's say this is when the employee left. I'm going to go into the enter payment screen. So currently that national insurance is being worked out using the monthly threshold. But if I tick this box to say they're leaving and this is their final payment, it gives some guidance on next steps for a leaver, but then it confirms that they're on director pro rata basis status. We should select this box if they're leaving and it's their final payment. And you'll see that it has generated an NI refund, in this case, £708.48, and also a refund for the employer. So it doesn't do any adjustments to the thresholds. It still uses the full annual thresholds because this employee has been employed since the start of the tax year. But it has worked out their director's NI on the cumulative method, as it would have done if they were on annual basis. And it's worked out that refunds are due. So this is your last calculation, you'll be glad to hear. For the employer national insurance, let's took the cumulative earnings and deducted the secondary threshold, multiplied by the employer percentage to give the amount due to date. Looking at what's been paid so far, based on those 2 months where the tables were used, has resulted in a refund to the employer of £494.60. The employer gets that back by simply reducing the amount that's paid at the end of the month to HMRC. For the employee, in this case, cumulative earnings are £12,000, but the primary threshold, the yearly primary threshold, is £12,570. So on that basis, because they haven't earned above the primary threshold, there's no national insurance due for the employee. So all of the NI that they paid in months 1 and 2 is being refunded in their final payment. So it's worked out pretty well for that director. Obviously, if they were a non-director, they would end up paying that national insurance. But I mean, that's how the rules work. So there's your 4 examples. As I say, you can see all of these numbers if you download the slides. And that has pretty much brought us to the end of the presentation. So we will stick around. We have got some time to continue answering questions in the Q&A if you have any final questions you'd like to submit. But if you do think of something after you leave us today, I just want to let you know where you can find further support. So we have an online help centre, which you can access from any device at sage.co.uk/help, or by clicking any help option that you would see in Sage 50 Payroll. You can search our knowledge base by entering a keyword. You can read support guides. And we've got a handy link for webinars at the top of our help centre, where you can view other sessions that are coming up and get yourself signed up. You'll also find all the contact details for our support team should you need to get in touch with them. And another great resource for you is Sage University at sageu.com. So once you've created your free profile there, find your way to the Sage 50 Payroll training. And from there, you can take our e-learning courses, which you can dip in and out of at a time to suit you. You can do online certification, and there are also a range of bite-sized learning courses on various payroll topics. So check those out if you haven't already done so. sageu.com. So for the remaining time, we're just going to check that we've covered off any questions that have come through in the Q&A. You've also got a final chance to download our handouts, which you can get from the documents icon there on the right-hand side of the screen. Later today, I will send you a follow-up email, which will include a link to the recording of today's session, should you wish to watch any of this back again. We'll also add the recording to our recordings article, which is available from our help centre. And at the point you leave us today, you will be prompted to complete a survey. And I'd really appreciate any feedback that you might have on today's session and our webinars in general. It really does help us improve these sessions for you guys moving forward. So watch out for a survey that appears when you exit out of the webinar. So I'm just going to go on mute just to have a look through the questions, make sure we've got answers out to most of those. And I will come back to say goodbye when we are ready to close things down. So I will speak to you soon. Hello, everyone, and thanks to those of you that have stuck with us to nearly the very end there. Seen that we had a few questions sneak through, so we've got some answers out to those. Hopefully those answers have been helpful to you. As we haven't had anything come through the last few minutes, we're going to start wrapping things up. So just want to take an opportunity to thank you all for joining us at the webinar today. Big thanks to Alice and Paddy behind the scenes answering those questions as well. If you wouldn't mind taking a moment to complete the short exit survey that appears when you exit the webinar, really appreciate any feedback that you have. And do look out for that follow-up email arriving later today, including a link to watch the recording of this specific session, but also links to register for our future webinars, including our payroll year-end series, parts 1 and 2, which begin from the 4th of March. So with that said, we are going to wrap things up there. So thanks once again for joining us. Enjoy the rest of your week. Maybe we'll see you on some of our other webinars in the near future. So goodbye for now.